Hey everybody, welcome. It is Friday, the 5th of July. Yes, we are working, even though most of the world, at least in the United States, is taking today off and making it a nice 4-day holiday weekend. We are busy working and taking great care of you and continue to providing you with some good information about what the heck is happening in the markets. So let's dive in and talk about what I want to cover today. Two topics I want to talk about today. The first one is, what's our path to lower interest rates? What does this look like? What's it going to take? We're going to show you some charts and some numbers and help kind of walk you through what I see and how we're going to get to lower interest rates. And then I want to talk about Dream for All and specifically the nightmare that is happening for a lot of people on the wait list. And it is a major issue. I'm getting a lot of people who are very, very concerned and frustrated about the wait list and what's happening. And so I want to cover that. But let's start first and foremost with the path to lower interest rates. So let's think back, and I got to wear these things as I continue to get older and not be able to read as well as I'd like. Okay, so let's think back. This has all been the last 2 years about inflation, inflation, inflation. Federal Reserve thought this was transitory and inflation was not going to be persistent. Now they've gone the opposite direction and says inflation's pretty entrenched and we're worried about it. And so they've been worried about inflation coming back down. And we've seen it come back down, but they still have not started lowering the Federal Reserve Fed funds rates. And we're all wondering, when are they going to start doing it? They've got a meeting in September. They are potentially lowering the rates in September. That's their last meeting before the election. Their next meeting after that is literally the day after the election. So this is their first opportunity and last opportunity to lower rates before the election. There's some political arguments that say they might do that. Then they got a meeting again in December. And so they have 3 meetings left in the year that they can lower interest rates. But are they going to? And the biggest thing that I've been talking about is the jobs report. And we have seen that the Fed has shifted their tone and said, hey, we're worried about inflation, but inflation's coming down. But if jobs keep growing, if wages keep growing, then people are going to jump right back in and start spending money, and that's going to drive inflation back up. So this morning was the jobs report for June. Now, I want to remind you of what this report is. It comes from the Federal Government Bureau of Labor and Statistics. And they put out a report that says, based on June's numbers, in the middle of June, they put out a survey. Now, their survey means they're calling like 1,000 random households and saying, hey, do you have a job? Have you gained a job? Have you lost a job? Are you looking for a job? And they're just randomly interviewing people and taking a sample and saying, well, based on that sample and other data that we have, here's what we think happened on how many people are searching for home or for jobs and how many people gained or lost jobs in the last 30 days. They get more data, improved data beyond the initial reports. So every month they're updating the report, they're not just creating the new report that gives you June's numbers, they're revising May's numbers. They're revising April's numbers. And that's critical because those revisions tell a bigger story. A month ago, on June the 7th, the jobs report came out and it showed a lot of job growth. Way more than anybody expected. It was 272,000 jobs that were created back in May that was announced on June 7th. That caused interest rates to go up. So let me show you in this chart right here. So this is the average 30-year fixed rate mortgage. And right here, we had rates really high coming into May, high relatively speaking at about 7.3%. And then they came down at the beginning of June. By June 5th, they were down to 7%. And then on June 7th, they shot up to 7.15. Monday the 10th, they shot up again to 7.17. The reason why? Because the jobs report showed a lot of growth in jobs. Now, the jobs report came out this morning. We're seeing interest rates drop. Why? Because what you'll see right here, so this is what you're seeing here is a portal that I use to kind of see what's going on with interest rates. And let me blow it up a little bit more and let me get rid of that. So right here in the bottom left corner, it gives me basic economic data and it gives me an overview. And it says, well, here's the big things that happened with the jobs report this morning. First of all, we had 206,000 jobs created compared to 190,000 that were forecast. That's bad news for mortgage rates because it means we're creating more jobs. But they revised last month's number down. They revised it down from 272 down to 218,000 jobs. We're talking about 54,000 jobs that they overestimated. because they were just doing random phone calls and ballparking on what they were looking at as how many jobs were created, and they guessed too high. So now the question is the 206,000 that they're guessing for this month really going to be revised down as well? But here's what's interesting. The unemployment rate went up. That's weird, right? They added jobs, and yet the number of people who are unemployed increased. How does that happen? Very simply, because it says more people are in the market looking for work. If you stop looking for work, you're taken out of the number of people who are trying to find jobs that can't find a job. What they're saying is, hey, there are more people who want to find work right now that can't find work, and that caused the unemployment rate to go up. That is part of what the Federal Reserve is looking at, is when they're thinking about lowering rates, they're looking at inflation coming down, they're looking at the jobs numbers stabilizing. Here's the deal. The soonest that the Fed's going to start lowering interest rates is September, and the jury is still out on whether or not they're going to drop rates at that time. The mortgage market continues to ebb and flow based on reading the tea leaves of what we think the Fed is going to do, because the Fed ultimately drives a bigger picture of the rate market. So if you are looking to buy in the next couple of months, I wouldn't expect much of a shift in interest rates. I think that the market that we're in right now is the market that we're going to be in through the rest of summer, at least for the next 60 days. So what does that mean? Well, it means some interesting things about the market. First of all, we're seeing more homes staying on the market longer. We're seeing less offers per home. So as a buyer, that's a buying opportunity. Now, the question is, does that mean house prices are going to go down a little further? They might. We don't know. We've seen house prices bouncing back and forth. And the problem is it's impossible to time the market. It's impossible to know if it's the perfect time to buy the market. So what you have to look at is timing your decision based upon your personal circumstances. A lot of you that are watching are Dream for All winners, and you're saying, hey, when should I pull the trigger? Pull the trigger when you find a house. I had somebody ask me on one of my YouTube comments yesterday. I didn't answer it yet, but he said something about, is 7% a good interest rate to lock at? It's the only rate that you can choose from the day you get into contract. And so the question is, how long are you going to wait to get into contract? Whether you're a Dream for All buyer or you're just a regular buyer, you have to time your personal buying decision. You can't say, I'm going to wait until rates are where I want them to be in order to lock. It's kind of like saying, hey, I have to go visit grandma at Thanksgiving and I got to buy airline tickets. You can't wait forever to buy those airline tickets. You can't buy them January of next year because you have to get to grandma's at Thanksgiving in January of next year. Thanksgiving's over. So you have to recognize the market is what the market is. It's no different than saying, hey, I want to buy gas and I need to fill up my gas tank, but I don't like the gas price, so I'm going to wait until next week to fill it up. Great. How are you going to drive between now and then? How are you going to get from one place to another? When you have an offer accepted on a home, you have 30 days to complete that transaction. You have about 15 days to lock in that interest rate. During that 15-day time frame, things can change a lot. And so the question is, do you risk it? Do you sit and stare at the rates and hope that they go down because you have just as much of a risk of them going up? There's a lot of things that make them change from day to day. So are rates going to go down? Yeah, at some point in time. Is it going to be this year? I don't know. The soonest we're likely to see them start coming down is September. And so if you're making a buying decision soon, you need to just look at, hey, what's available to me? And should I buy down that interest rate or not? Should I look at other scenarios of maybe a temporary buy down? There's lots of pros and cons to all of these different options. All right, so we have a question. Mohammed said, do you believe that 17 days are enough to close a loan and contingencies? Depends on your lender. Depends on what type of loan that you're doing. I think that if you're talking about a Dream for All loan, your unknown is how long it's going to take Cal HAFA to sign off. That's an extra layer. If you're talking about any other type of a loan, it depends on how quick your lender is in being able to order an appraisal and how long it's going to take to get that appraisal back, and then how quickly they can go through underwriting. In general, yes, I think that we can get a loan closed in 17 days in most circumstances. I think Dream for All, I'd be looking at 21 as a short close of escrow and 25 to be safe, because we just don't know how long Cal HAFA is going to take to review them. So hopefully that helps answer your question. As always, I want to be interactive during these live streams. So if you have any other questions, anybody, please feel free to post them. But let's be clear. The path to lower interest rates has been laid out. The Fed has said, we know what it's going to take for us to start lowering interest rates. We know rates are very high and that they're very restrictive. We know that we're not going to continue raising interest rates during this cycle. We know the next move is to lower interest rates. We don't know when. And we're waiting to watch the inflation data. We're waiting to watch the employment data. And just like when inflation started taking off and the Fed waited and waited and waited, hoping they don't want to be seen as wishy-washy. So they're going to wait. They're going to watch the market. They're going to watch the tea leaves of the inflation reports, of the jobs reports. And they're going to, even when they think it's time to lower rates, they're going to continue waiting. So you need to understand that, yes, we're going to see lower rates, but the Fed is in no hurry to make it happen. And big picture, it's healthier for the housing market the longer we wait for rates to go down, because it means we'll have more inventory and we'll have a little more stabilization in house prices. Because I believe as soon as interest rates come down, house prices are going to shoot up. All right, my second topic, the Dream for All waitlist nightmare. Whew. I got to tell you, I have gotten more feedback in the last week about waitlisters and their fears and their concerns. So I want to recap very quickly 3 outcomes from the lottery. Out of 17,000 applicants, 1,700 were selected as winners. For those of you selected as winners, congratulations. If you haven't seen the video already, I've got about an hour-long video that I cover in depth what steps winners should be taking right now. Check it out on my Dream for All YouTube channel. Then you have another segment 3 times as large, 5,100 people who were put on the wait list. And then the third category is people who said not selected. So we have about 10,200 people who were not selected. Now, for those who won, great, congratulations. You got to get on the stick and start looking to write offers ASAP. For those who were not selected, we're all disappointed. I'm disappointed. You're disappointed. But you at least know. You know the answer. You know that, okay, I need to look at alternative options, or I need to renew my lease, but I can make plans. I've been waiting for 60, 90, 120 days for Cal Haffa to tell me what's going on. Now they've told me that I didn't win. I can make plans. I can move forward. I know what steps I need to take. But the waitlisters have been put into purgatory. They're being told, hey, your number blank on the wait list. That's great. I'm really happy they gave us a number. Imagine if they didn't give you a number. But they gave us a number that has you wondering, am I ever going to get picked? Now, I've got another video that I did that's a nice long hour-long video for waitlisters that talks about why I think that at a certain point, your chances drop significantly. And I break down how I see the numbers playing out on when they'll get to a certain point in the wait list. The question is, what do you do in the meantime? Do you renew your lease? Do you sign your kids up for school in the school district that you're looking at? Do you go ahead and make the decision to buy something because you feel like, hey, my chances are pretty small in being able to get selected, and then you end up getting selected and you missed out on the opportunity to take advantage of the Dream for All program? It is purgatory. And I'm super, super empathetic to those who are in that position. I think it is the biggest challenge right now. And I think it's going to take a very, very deep dive into strategy of what are your long-term and what are your short-term goals. And I would love to be that person to help set that up for you. So if you feel like, hey, I'm in that position, I'm on the wait list, I don't know what I'm supposed to do. Nobody knows. I won't know either. But I want to help you think through the choices. I want to help to guide you through the questions you should be asking yourself on whether or not you should pull the trigger on an alternative, whether that's an alternative rental situation, whether that's an alternative buying without using the Dream for All program, or do you wait and cross your fingers and hope? There's no wrong answer and there's no right answer. So as I update you on this quick update here on the 5th of July, I just want to say I want to be a resource into helping you out as I continue to be. So if you have any questions about anything, Dream for All or non-Dream for All related, feel free to post them into chat now if you're watching live. If you're not watching live, post them into chat and I'll get back to it later. Otherwise, I hope everybody stays cool in this crazy heat wave that we're having here on the West Coast. And I heard that it's moving east as well. And just know that I am interviewing to be your loan officer. So if you have questions about anything, please feel free to reach out to me. I would love the opportunity to answer those questions and then hopefully earn the right to be your loan officer, whether it be today or at some point in the future. I really, really am honored that you're listening to me and that you give me the opportunity to help guide you. So thank you for listening. Hope everybody has a wonderful holiday weekend, the rest of your weekend, and we'll talk to y'all soon. Bye-bye.